BNW, 1120 AM and 102.9 FM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutsky, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today, we're talking about the implications of gifting assets away. Todd, if you're trying to protect your assets from the cost of long-term care expenses, what are the risks in giving your assets to a child rather than transferring them to an irrevocable trust?
Yeah, that's a great question. So many people feel like, oh my gosh, it's an irrevocable trust. I've lost all control. I've given up the ability to do just about anything. You know, you hear that all the time. But you know what? Think about it. If I instead gave my investment portfolio to my children, right, or my rental property to my children, I mean, how much control do I have over that? I got none. I mean, I got to rely on them to pretty much do everything, not to mention the fact that, you know, let's say I gave my rental property away. Technically, I can't sell it. I can't do anything without the children doing it. And what you forget is the children then would be entitled to all the rent. Well, you gave away your rental income. You know, what about if a child gets a divorce and you gave them an investment portfolio to hold on to? Well, that money would all be subject to their divorce or any of their creditors. Plus, it all gets picked up on their income tax return. Folks, you give away assets, you lose all control and create lots of adverse income tax and gift tax consequences. You're way better off setting up an irrevocable trust to protect your assets from the cost of long-term care.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699, or you can request a copy from LegalExchangeShow.com. Once again, 866-848-5699, or you can request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
As we head towards Thanksgiving, just a day to go. I'm sure a lot of you might be getting on the road now to get to friends or family, whoever you may be spending the Thanksgiving holiday with. Maybe you are in the airport right now navigating what's probably a little bit of a messy travel season given some of the winter weather coming through. But things still moving in markets. We got some economic data. We got some big stories to get to. And none bigger, Mark, then where we kick off talking about the latest with the OpenAI saga, where last Friday, Sam Altman, hey, you've done something very, very bad. You're out. In comes a new CEO who lasts all of 2 days, who is then replaced by another CEO who lasts all of 2 more days, and now Altman heading back to OpenAI, and actually not heading to work directly with Microsoft here. It has just been one of the greatest catastrophes of corporate governance that I have personally ever seen. It has cost a number of board members.
Really? Worse than Enron?
Well,
worse than a big publicly traded company that actually has market impact?
Just in terms of the evidence of the ineptitude of the board of directors in this case, it's not deliberate fraud, which is a whole different category of malfeasance, but in terms of, hey, we're trying to do something, productive with this company, and we just can't, I'd say this is about as bad as it gets.
Yet it's not publicly. I hear you. This is good practice because I have to pretend to be interested. This is good practice for tomorrow, Thanksgiving dinner. You have to pretend to be interested in something that you don't really think matters. So this is good psychologically for me. This company's not publicly traded. Microsoft owns a big stake in it, so to an extent their future depends on it, and maybe the future of other companies that will exploit whatever innovations, OpenAI, follow-on innovations they introduce. But are there any broader implications for, say, you're in the business of analyzing securities to recommend what clients should buy or deciding what to buy yourself? What is the teachable moment here? And that's what I'm having trouble extracting a lesson from all
I think it is that corporate governance matters because effectively this board had to do a complete 180 because they would have reduced the value of this company to zero overnight.
Wasn't it just employee pressure, though? Wasn't it? You could say that it was a bunch of, prima donna programmers who decided they wanted to continue to work for their dear leader, someone they respected intellectually.
Well, yes, but I guess this is what I'm saying, Mark, is they didn't take into account what would actually happen when they did this.
Yeah, leaders.
The board completely misread everything that was going on at the company.
Yeah.
And so if you believe that the value of the company is in the future development of AI, and 95% of your workforce says, if you do this, we're going to leave, that to me suggests that you don't really have a good handle on what's going on at your company.
Yeah, but do most board? I'm not arguing that it clearly seems inept. I just question the implications, given that it's a small, non-publicly traded company. People are infatuated with the topic right now, so it makes headlines. But
So
do
you don't think
boards
corporate
typically
governance
have-
matters?
No, I do, but does a board typically have a read on the mood of the employees of the company? You leave that up to the CEO, who they decided to remove in this case. Maybe they should have taken his word for it.
Well, no, I think that ultimately a board should know what is like the key driving force of the company. In this case, I mean, think of it. Let's look at it this way, Mark. If the board of directors of Apple decided that they were going to get rid of Steve Jobs when he was there, the stock would have done very badly, correct?
Stock, in that case, publicly traded company, we had an immediate barometer.
And it did. In fact, when Apple got
Are we
rid of
talking
Steve
about
Jobs
the
in the
93 to
1990s,
the
the stock did absolutely horribly because, again, like a critical failure of corporate governance, not understanding what was driving the company. I don't think it matters whether the company is publicly traded or not. I think corporate governance matters for everyone, like for every company, whether it's a small company that does $5 million in revenue or a giant one
Yeah,
that
it does,
does
but
$500
it doesn't affect
billion.
me or anything my clients own. If I had
Well,
clients,
but that's not the
or broad
barometer
market
for it.
indices. Okay,
That's not the barometer for it. I think ultimately
That's fair.
what's important here is the lesson that every board needs to take from this, and that most I think are quite fine with, is, hey, you got to understand what is important to making your company tick and what isn't.
Do you think any boards are doing soul searching after this? Oh my God, we got to change next quarter's agenda.
No,
we
'cause
don't
I
want to have
I-
an OpenAI
I-
on our hands.
I don't think anyone's this bad. Like, I think this is comically bad.
I agree with that. Of course. I'm not questioning that.
Like,
Chuck.
that's-
I'm just questioning the amount of attention paid to it. That's all.
Well, I think it receives a lot of attention only for two reasons. Quite honestly, if the board had actually given three reasons. The first is obviously the focus on AI, which gets everyone saying, oh, like, gee, like, what's going on here? The second is it still is a week later now almost, and the original board has not actually told us what the problem was. Like, they just said, like, oh, we found that he wasn't forthcoming in things, and this, like, and then it morphed into, well, he, assigned projects to multiple people. Like, they haven't told us what actually happened. So that's part two. And part three is things got so bad so quickly that they had to reverse themselves within a week.
What if sorry, go ahead.
If this were simply a situation where, hey, we're moving on from the CEO, and again, let's say that it is something really bad that, causes you to move on from the CEO of, one of the companies that is on the edge of the hype train right now. First of all, you'd probably say Microsoft isn't hiring him in 2 days later, just because Microsoft, if they're one thing, they are very risk averse when it comes to those types of things.
Oh, what do they have? Like a day to do their due diligence, though? What if there is something out there that we don't know about? Some malfeasance, misfeasance, nonfeasance. He breached his fiduciary duty in a extreme and severe way. But the board can't say anything publicly because then they might become liable. Maybe that's slander. I don't know. What if there's something more there? Presumably Microsoft had due diligence on the shelf and ready to go on this guy.
Well,
but
exactly.
what if they jumped the gun, too? I don't know. I'm just
It's
trying
possible.
to make a.
It's possible, but if that's the case, let's say that it is something that's awful, right? Let's say that it's something that is horribly bad that warrants a firing. Well, that's even more comical now that you've brought him back 5 days later.
It is, yeah.
No matter how you slice it, it's like, okay, if
It would
there
have to
was-
be really bad, Chuck.
If there was nothing there, then this whole process is just a joke. And if there is something there and now he's back, well, it's also a joke. There's no scenario in which the way that the last 5 days played out looks good.
Yeah, either he's in trouble and they're in trouble longer term because there is something. Presumably they fired him for more than clipping his nails at his desk or something we'd all find annoying.
Right. But if they didn't, then it's like, well, what are you guys doing?
Then they're liable as fiduciaries for making an awful decision.
And well, and again,
In the case
some
of
of
the
the stuff
latter.
that's even the stuff that just is fully clown shoes is the guy on the board who was pushing for this was then one of the guys who on Monday said signed a letter saying, I need the old members of the board to resign, of which he was a part of.
Okay. Maybe these people are just spectacularly inept.
I think they're probably really smart at the AI part of it, which is the tough part. For some reason, they wanted to handle all of the corporate governance stuff themselves, and I don't think that they have those skills because it's just a completely different skill set than programming AI models.
There is irony there. They have no emotional intelligence, yet they're designing these incredibly sophisticated, human-thinking, approximating machines. There's a little bit of irony. That's probably what you were saying.
It's we're so concerned with, hey, is AI gonna, change? We're nervous about AI because we think that it might, reduce the humanity of, us to something lesser. When in fact the people programming the AI might be who we need to be concerned about to begin with.
Yeah, we need to start. AI needs to start by replacing them.
We need actual humans to base the artificial intelligence off of, not robots who look like humans. Right? I don't know. There's a way. I didn't quite get the phrasing there, but it is what it is.
No, it's concerning that these are the people driving this technology that's supposedly going to be world-changing. Can they be? And Mike Armstrong made this point yesterday. I didn't pick up on it. It's gelling for me now. If they're this inept, should we be worried about AI and its potential for misuse, despite whatever restrictions our legislators try to impose on it?
Let's take a quick break. When we come back, the other side of the AI coin, hey, what powers all of it? We got Nvidia earnings after the bell yesterday, so we'll be talking about those when we return.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Securing your family's financial future is one of the most important elements of estate planning. Leaving assets to your children can be very beneficial. However, gifting these assets can pose major problems. If you gift your home to your kids and they suddenly decide to sell it, your gift could create massive capital gains tax problems. Cushing & Dolan are experts in elder law. Let them help with your legacy planning by calling 866-848-5699. Ask for their new guide called Making the Most of Gifting Assets. Whether you're deep into the planning process or just starting out, this guide contains the information you'll need to make the right decisions for your overall plan. Call today, 866-848-5699, and get this new guide, Making the Most of Gifting Assets. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Vonner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. The Financial Exchange has a brand new text code. Text us at 617-362-1385 and keep on top of breaking business news all day long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Fall's in full swing. The cold weather is coming, and now is the perfect time to get a head start on your next vacation. The U.S. Virgin Islands have been named one of the top Caribbean destinations so far this year, according to Travel Pulse. Explore St. Croix, St. Thomas, or St. John and enjoy incredible beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mark, let's talk a little bit about what Nvidia is seeing right now on the back of the AI boom, and it is just absolutely booming sales. Sales tripling compared to the year prior period to $18.1 billion. Profits also rising to $9.2 billion compared to $680 million a year earlier. Nvidia also guiding for Q4 that their sales are estimated to be around $20 billion, beating expectations of $18 billion. Now, the stock is valued through the absolute stratosphere, so that's part of the reason why, hey, even with all of this growth that you're seeing and even beating expectations pretty much everywhere, it's not exactly like the stock took off today and started, mooning itself. It's actually down 4% despite what it reported. And this gets at what we've been talking about with stocks like Nvidia, where, hey, if you're valued, 115 times earnings and 36 times sales, yes, you pretty much do have to triple your revenue every year for like 5 years to grow into that valuation.
Yeah, and it's driving this distended return in tech versus the rest of the market. Tech stocks are now up 52% year to date, 12.7% this quarter alone. So that's not unheard of. In 2009, Chuck, I like to show my little patchwork of sector returns by year. It shows streaks. It shows reversals of fortune. I think it's just a fantastic way to visualize the randomness in returns and the changes in patterns over time. Tech stocks were up. You probably remember this more vividly than I do because you're such a sector aficionado, but up over 50% in 2019, 50.3% according to S&P, up 44% in 2020. So when tech has been up lately, and let's just add 39% in 2017, rounding up a couple tenths. When tech goes up, boy, it really goes up. These returns are reminiscent of those in the late 90s when tech was doing, 70, 80% a year for 2-3 years in a row. And one wonders how big this sector can get as a fraction of the overall market. I'm still a big fan of index fund investing. I wouldn't bet against it or for it, but like you point out, expectations are pretty darn high, and it's going to be hard to fulfill them.
Yeah, I mean, when you are, think of it this way, you're trading 36 times sales right now, which is what Nvidia is currently at. So let's say that your sales triple next year and the price stays the same. Like the price doesn't go up. You're still 12x sales. Okay, that's still pretty darn steep. Then you say, okay, we're going to, triple again our sales. Okay, now you're 4x sales. Just as points of comparison in the semiconductor space. AMD is trading 9x sales, and they're growing pretty aggressively as well. Intel, who's treading water, is trading 3.5 times sales. So pretty much the path to getting to a normal valuation in the sector, and again, this is normal in the context of its comps, not necessarily where I think should be normal. Yeah, you pretty much have to, triple and then double.
Yeah.
So that means that you're going from like $80 billion in sales this year to $240 billion. Like,
Yeah,
are you
growth
gonna
can't slow down.
Are you going to get to $400 to $500 billion in sales in calendar year 2025?
You don't see exponential growth. So growth accelerating, even counting the higher base. It's almost, I don't want to say impossible because it could happen in a year and I'll look stupid. But
right.
very, very difficult to do, to say the least.
And the problem here is Nvidia is one of those companies where if you look at it just from like a corporate perspective in terms of like, is the company profitable? Is the company the company in and of itself is going gangbusters. I mean, again, they did $9 billion in profit for the quarter. So this is not a EV SPAC bubblicious, hey, we've got no revenue, but we're, going to sell 200,000 EVs to Amazon type story. This is, no, like in the last quarter, we did $18 billion in revenue and had $9 billion in profit. We are insanely profitable as a company. But you guys just think that we're like maybe too much, and maybe we're not going to get to where you think we're going to get to.
No, not
So
if yeah. No, go ahead. Sorry.
This is one of those cases where the company can be great, but the stock can be a little bit dodgy just because it's gotten kind of wacky in terms of pricing.
Yeah, particularly when, in light of what we were talking about in the last segment, a leading provider of the technology that uses these chips is a three-ring circus.
Yeah, and also that one of the other things that came out over the weekend was that Altman was in talks with Microsoft to try to develop an internal competitor to Nvidia. So you're like, oh, wouldn't that be interesting?
Yeah, how wide is there, as Warren Buffett and others like to ask, how wide is, I know they've got 85% market share, the article points that out, and you don't just gear this, you don't just ramp this stuff up overnight. But how durable is their current advantage?
No idea. It would take someone who's way more well-versed in
Right.
the actual technology for me to understand. Because the chips that they're selling now for AI, they're going for... It's not just like what you have in your computer. The chips they're selling alone are going for like 40 to 50 grand a pop. Sure. So it's you don't just take the graphics card in your computer, strap 3 of them together, and you're like, hey, I made an AI. Like it's a little bit more complex than that in terms of what they're selling. When it's like, hey, we're buying. I saw that some company had an order for, it was a $10 million order at 50,000 a pop. So it's 2,000 of these chips to try to build an AI server farm. Like, that's the level of investment, like, probably that's a minimum requirement to do these kinds of things. Again, when you're doing, like, 18 to 20 billion in revenue a quarter, you're not making it by selling, $300 graphics cards at a time. It's, yeah, we're gonna do, 40,000, 10,000 of these $40,000 chips.
Yeah, and for all its vaunted potential, I've yet to see Microsoft do anything with it. Microsoft Word and Excel, to me, work exactly like they did in 1997.
And this
would
is
love
the
to
shame.
see some upgrades.
What I would love for Excel is, hey, I've got this unstructured data. Let me type in, move, organize this way, that way, and do this and this and this, and it does it without me having to build a formula.
Oh, that's what we need coders for, Chuck.
Quick break. Wall Street Watch and Ask Todd are next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems, where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Susan and Mike from the Armstrong Advisory Group, and this month we're talking about our free guide, the top year-end financial tips. Mike, the holidays are coming, and that brings with it the desire to gift to your family. What are the rules around the annual gifting limits?
Well, you, Susan, owe me a gift every single year, as we know. But I don't think that's what we're actually talking about. What the rules state is that you're able to make gifts in 2023 up to $17,000 without triggering any sort of reporting or paperwork requirements to the IRS. If you go above that $17,000 exemption amount per person, then you do have to file a gift tax return, but it doesn't necessarily mean that there will be any taxes owed. That's where a tax professional really comes into play here to make sure you understand what the ramifications of that are. But gifts to 529 plans, for instance, if you're looking to fund a specific goal, are very common this time of year.
So if someone's thinking about gifting away as a strategy to reduce their taxable estate, Mike, how do they go about that if they want to give away much more than the $17,000? That's the freebie, if you will.
Honestly, more than we can get to in a quick discussion, but you need to talk to a couple of planners here to make sure you understand the tax ramifications and understand the current limits, because states like Massachusetts just completely redid their estate tax, so there's new things to know about that type of strategy.
Folks, we have information about gifting as well as much more in our brand new guide, The Top Year-End Financial Tips. You can get your copy today by calling 800-393-4001. That's 800-393-4001, or request one online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, one day after the S&P 500 and NASDAQ snapped their 5-day winning streak, markets today bouncing back ahead of the Thanksgiving holiday. Right now, the Dow is up by 151 points, S&P 500 up 21 points, and the NASDAQ up 87 points. So all three up about 0.5%. Russell 2000 also up about 0.5%. 10-year Treasury yield up by 1 basis point at 4.43%. And crude oil, that is down by 4.5%, trading at $74.29 a barrel. Shares in HP up by 5% after the PC maker posted disappointing fiscal fourth quarter results where its earnings came in line with estimates. However, revenue did fall short of street forecasts. Meanwhile, Deere shares down by 7% after revealing net income guidance between $7.75 billion and $8.25 billion for fiscal 2024, short of analysts' expectations of $9.31 billion. Elsewhere, Autodesk posted weaker than expected fourth quarter earnings guidance. Furthermore, Piper Sandler downgraded the software company's stock to neutral, noting it may take time to build investor confidence in the company's growth forecast. That stock down by 5%. RBC Capital upgraded GoDaddy to outperform from sector perform, saying the company is a durably growing cash machine with a dash of AI, and that expectations for GoDaddy next year appear too low. Shares in GoDaddy currently up by 2.5%. And as a reminder, markets will be closed tomorrow for Thanksgiving and will also close early on Friday at 1 o'clock. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
As promised, we are now joined by Mr. Todd Lutsky from the law firm of Cushing & Dolan. The segment's called Ask Todd because, well, you get to ask Todd your questions about your estate plan, or maybe your lack of an estate plan. You're just trying to get started and figure out, hey, where do I begin? So the studio line here to ask Todd your questions right here on the air is 888-205-2263. That number again is 888-205-2263. Last couple weeks, we have not been able to get to everyone, so if you do want to make sure we get to your question, get calling early. Again, that number is 888-205-2263. One more time, 888-205-2263. Mr. Lutsky, how are you?
I am doing well, and you?
I'm good. I was out yesterday. I'm trying to buy a new sofa.
Oh, yeah?
And
how's that working out?
Well, so the guy says, look, this sofa, it'll seat 5 people without any problems. And I say, oh, that's interesting, but where am I going to find 5 people without any problems?
That's a problem.
I don't know what to do. Todd, let's talk a little bit about gifting, since we're 28 days away from Christmas. We are, I think, 17 days away from Hanukkah. I know, 14, I believe.
But who's counting?
We're getting close.
Yeah.
When we talk about gifting, not just for, the holidays, but when we talk about gifting as a strategy for estate planning, why would someone consider a gifting strategy as part of their long-term estate plan?
So gifting is driven by a lot of things. Mostly, and I would say maybe most importantly, is taxes, all right? So taxes tend to drive your ability to gift or not gift. So first thing is, if you look at your estate and you say, I'm going to be over, even in 2026 when the federal exemption falls down, right? I'm going to be over $13 million. Well, then I want to gift because I want to use my exemption before I lose it. And the only way to do that is either die, which is not helpful, or
not ideal,
or gift. And so one of the things to gift is, hey, if I can save death taxes by getting assets out of my estate today, not just today, but don't forget about all the future appreciation, which is really why we make the gift. We gift it today, yeah, it's out, but we also have all the future appreciation that we want to get out of the estate. And if that's going to save me estate taxes, then I might consider it. And now, again, not every state has a death tax. I know only about 15 states in the entire country have an estate tax. So it's not
the District
always
of Columbia.
Yeah, right. And it's not always driven by state death tax, so much more by federal. But what I think people need to be aware of is, even if I'm going to do that, I got to figure how much am I saving versus what I'm giving away. Because when I give away certain assets, I give away the cost basis. So what if I have an investment portfolio that has grown significantly over time? Well, there's a lot of gain built in. Or what if I've got that rental property that has been depreciated to zero on the basis of my renting it over the last 20 or so years, and I give that away? Well, then it's all gain, right? If I got $1 million property and I give that away with no basis, it's all gain. Well, then I'm trapping $1 million of capital gain at least 30%, give or take depreciation recapture, and you're stuck with a $300,000 tax bill. Well, I better make sure that whatever I'm saving on the estate tax front is more than $300,000, or maybe this isn't worth it. Because if I can keep it and die owning it, I get a step up in basis for my beneficiaries, thereby eliminating that $300,000 liability on the gain front, capital gain front. And yes, I pay estate taxes, but if it's less, pick your poison, right? Which one do you want? And quite frankly, giving away assets outright might not be the best thing to do either. Consider an irrevocable gifting trust when you do find out that gifting makes sense for you, so that you can control it from the grave and maybe even get it estate tax free to grandchildren, so you skip a generation, protect it from creditors. I mean, there's so much to think about, and we can certainly explore that.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. If you've got a question that you want to ask about your estate plan, this is your opportunity. It's why we call the segment Ask Todd. The studio line is 888-205-2263. That number again is 888-205-2263. We're going to go to break, but when we come back, it's going to be right to your questions with Mr. Lutsky. So get all queued up, get dialed in, 888-205-2263. Quick break, then your calls.
Ask Todd with Todd Lutsky, every Wednesday at 10:30, only here on the Financial Exchange Radio Network. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Securing your family's financial future is one of the most important elements of estate planning. Leaving assets to your children can be very beneficial. However, gifting these assets can pose major problems. If you gift your home to your kids and they suddenly decide to sell it, your gift could create massive capital gains tax problems. Cushing & Dolan are experts in elder law. Let them help with your legacy planning by calling 866-848-5699. Ask for their new guide called Making the Most of Gifting Assets. Whether you're deep into the planning process or just starting out, this guide contains the information you'll need to make the right decisions for your overall plan. Call today, 866-848-5699, and get this new guide, Making the Most of Gifting Assets. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle Albert Warner served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father Victor and brother Timothy. I am a veteran and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit DAV5K.Boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Fine-tuning your financial strategy as the year comes to a close is very important. So this month, we're sharing what we believe are the most crucial year-end financial tips. As 2023 winds down, there are several opportunities for you to consider that may help you end this year with as little concern as possible about your overall planning. Things like maximizing your charitable giving, offsetting your capital gains, and contributing as much money as you can to your IRA or 401k plan. We'll walk you through these issues and more in our new free guide called the Top Year-End Financial Tips. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
All right, continuing with Mr. Todd Lutsky. Again, if you have a question you'd like to ask him about your estate plan, the studio line here is 888-205-2263. That's 888-205-2263. Still have room for maybe one or two more calls. Let's go first to Jason in Lynn. Jason, you are on with Mr. Todd Lutsky.
Thank you for taking my call.
Sure. Happy Thanksgiving.
Happy Thanksgiving to you as well. My sister passed away this past summer.
Mm-hmm.
She was never married, had kids or anything like that. She didn't own real estate.
Mm-hmm.
She does have about $250,000 worth of money that I'm going to end up dispersing in three ways.
Mm-hmm.
I just want to know the best way to do that without incurring some kind of I don't know if there'd be a tax burden or anything else. I have no idea.
So let me ask you this. So did she die with, I assume, with just a will?
She had a will. It was never an official will. She had written it down what she wanted. It's already gone through probate and all that.
Oh, okay. So that was my point.
I'm just waiting for pension money from the state on top of the money that she had in the bank.
All right, so at least you had some direction. So I get it that it went to probate because there was no will, and you went through that, and you've got some direction that it's supposed to go three ways, right? Now, are you appointed as a personal representative by the probate court?
Correct.
Okay, great. And so this money is sitting in some kind of a probate estate. In other words, you opened up a bank account in the name of the estate of your late sister, correct?
I have not done that yet. It's still in her accounts. I haven't taken anything out of her accounts at all.
So I think you'll probably need to be directed to that idea. So you'll have to get an estate account and open it up, and then deposit the money into that estate account because you have the authority. You're the PR. So once you do that, right, then you can cut these checks. 1/3, 1/3, 1/3 to whoever you're writing the check to. Now, why am I telling you to take this extra step? Not that it might ever be a big problem, but one, there is no death tax due here, right? So in Massachusetts, the new exemption is now $2 million. So she died well under the $2 million exemption. So no filing requirement and no death tax due to Mass. So that's fine. What you worry about if it's not done this way is there's a gift tax, right? So as long as you're the PR, personal representative, and you open up that account and deposit it in there, then you can write a check from that account with an ID number that you'll get from the IRS for that new bank account. Then when you cut those checks, those are considered distributions from the estate of your sister, not gifts by you. Where if, on the other hand, let's just say your sister just had you as a joint owner on the account, because it was convenient and you were helping her and she didn't mean it all to go to you and you knew she wanted it to go three ways, but it was a joint ownership account and you just got all the money. Well, now it's in your name. You avoided probate. That's nice, but you would own all the assets individually. And if you were a nice person and said, well, you know what, I want to honor my sister's request or interests here, my sister's wishes, and I'm going to cut these 3 checks anyway, those would be taxable gifts by you to those people, even though you're trying to do the right thing because you're the owner. This way, if you do it through the estate and you do it as a PR, a personal representative, then it's a distribution from the estate and not a gift by you, and you can wipe your brow. So there you go. Hopefully that was helpful, and you can make that call and get these checks out. And it's a good time, too, because it's Thanksgiving. It's gifting time, folks. And that's what this guide is all about. We are approaching the end of the month here, so it will go away. So if you want to get the gift, if you want to get the guide, making the most of gifting assets. We talked a little bit about it at the top of the show, at the top of the segment. But gifting sounds easy, but it's not so easy, right? You really need to think about what asset you're giving, whether that asset has a low basis or a high basis, because if you give away low basis assets, then you incur or trap, I should say, capital gains tax liability for the beneficiaries you're giving it to. Yes, in essence, you're giving somebody a tax bill, even though you feel good because you're giving away the asset. So be careful on how to do that. Also, decide whether or not gifting even makes sense. Am I saving estate taxes? Am I incurring income taxes? If I'm going to gift because I have a higher net worth situation, gift it to a trust maybe that you can control and protect from future, generation skipping tax benefits to grandkids and protection from divorces. Learn how best to make use of your gifting. Get the guide, Making the Most of Gifting Assets, 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com.
Todd, a question that I have just when we talk about the structure of people who gift charitably.
Yes.
When someone has a highly appreciated asset that they gift to a charity, how does that work for the charity from a tax perspective, and how can that inform, maybe what you're gifting to who or to what charity?
Yeah, so giving to charity is a completely different animal, really, and there's many ways you can do that. So there are ways where you could set up, if you're doing an estate plan and you want a charitable remainder trust is a wonderful way to do it. Why? You can give away like a building that has a lot of gain in it, sell the building, defer the gain, invest all the money, and then you can take a stream of income from that over your lifetime. And then when you die, the balance goes to charity. So that's a great estate tax benefit because whatever goes to charity, you get a deduction on. And while you're living, you still get, a nice cash flow. So that's a great idea of doing that. And if you're going to make outright gifts to charity, the other way to think about it is, when you give capital gain assets, there are limits on what you can deduct, right? So if you give away a lot of assets in one day, you might not be able to take the entire deduction on your income tax return in that year. So be mindful that if you make a gift and there's a big capital gain, I believe you're limited to 30% of your AGI for the period for that deduction. So the good news is that's the most you can take in that given year, but then you have another 5 years after that to continue to take the balance of that capital gains or of that charitable contribution as a deduction. So year of gift, you get a deduction, and then 5 more years to try and soak up the rest of that as deductions. But it doesn't all occur in 1 year. So a little bit tougher when you think about charities, I think.
Mr. Lutsky, thank you so much for joining us today. We appreciate it, and I hope you have a great Thanksgiving as well.
Well, it's always a pleasure. Thank you, and thank everyone for listening, and I want to wish them all a very happy Thanksgiving as well.
The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated. This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com.
Still a lot to come as we continue on the Financial Exchange, including, hey, we got the holiday shopping season kicking off in earnest with Black Friday in just 2 days. What are the expectations for it this year? Also, we got Fed minutes that came out yesterday, so we'll talk about anything new that we may or may not have gleaned from the release of the Fed's meeting minutes from last month's rate decision, or rather early this month's rate decision. We also have a little bit of news in the world of crypto. Another day, another guilty plea from a scammer. Well, in this case, yeah, somewhat scammy, but also just further evidence that crypto tends to be used to funnel some pretty unseemly things from time to time. And then we've also got a little bit out of the aviation sector talking about Boeing and also American Airlines. Whole lot more to come as we get to hour 2 on the Financial Exchange.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutsky, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about the implications of gifting your assets away. Todd, what happens if you give your home to your child in an effort to protect it from the nursing home, and later on you decide you want to sell it?
Yeah, that's just one of the problems of giving away your house, but let's explore it. If you give your house to your child thinking, okay, that was easy, but now you don't own it. So now you really have no right to live there and, of course, no right to sell it. Right now, if you happen to have kids that are really nice and you ask their permission, which I don't ever want my clients to have to do, to say, please sell the house, you've also given them a huge tax liability because all the proceeds would go to them. Now, you don't have the money you need to buy your new house. And plus, if they don't live with you, then they don't get this capital gains exclusion that goes around along with selling your primary residence. So you're creating an adverse capital gains tax bill for them to pay. And then in addition to that, if they are nice, after they pay the tax, then they have to give you the money back, which could create a gift tax problem for them and impact their estate planning efforts. Finally, you get the money back, and then you can go ahead and buy another house. Folks, don't go through that. Set up an irrevocable trust to protect your assets from the cost of long-term care.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack, but not with ZipRecruiter. Its powerful technology actively finds and invites qualified candidates to apply to your job. So while other companies might deliver a lot of hay, ZipRecruiter finds you the needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. Try ZipRecruiter for free at ZipRecruiter.com/free. That's ZipRecruiter.com/free.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of Consumer Cellular single-line 5GB data plan with unlimited talk and text compared to lowest cost single-line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Fine-tuning your financial strategy as the year comes to a close is very important. So this month, we're sharing what we believe are the most crucial year-end financial tips. As 2023 winds down, there are several opportunities for you to consider that may help you end this year with as little concern as possible about your overall planning. Things like maximizing your charitable giving, offsetting your capital gains, and contributing as much money as you can to your IRA or 401k plan. We'll walk you through these issues and more in our new free guide called the Top Year-End Financial Tips. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Kicking off the 11 o'clock hour, it's Chuck, Mark, and Tucker within. We got stocks up modestly today, potentially finishing off the pre-Thanksgiving week with some green. We got the Dow up 119 points, 1/3%. The S&P's up 16 points, 1/3%. And the NASDAQ up 76 points, 0.5%. 10-year U.S. Treasury is up 1 basis point to 4.43. It was down as many as 5 basis points in early trading today, so a little bit of a sell-off in bonds happening in the last couple hours. We got oil selling off down $3.26 a barrel on West Texas Intermediate to $74.51. National average for gas prices, according to AAA, is down to $3.28. And I believe we now have either 13 or 14 states where the average is below $3 a gallon, mostly in the southeast. The lowest that I have seen is in Texas at $2.75 a gallon. Whereas the highest I'm seeing for the holiday driving season is, no surprise, California, $4.94 a gallon. If you look across New England states, Maine's at $3.39, New Hampshire $3.27, Vermont $3.47, Massachusetts $3.41, Rhode Island $3.34, and Connecticut $3.40. So those prices all down about 40 to 50 cents from a month and a half ago. So if you're on the road right now, they're going to be a little bit cheaper for you to fill up on the way to your final destination for the Thanksgiving holiday. We got gold off $4.20 an ounce at $19.97.40. What's the?
I don't know, Chuck. We got news about inflation this morning, and I know I'm one of the last people in America that cares about this right now because the chattering class, and I don't mean that in a demeaning way. I just mean the consensus view is that inflation's under control. We can move on to worrying about other things. I think a lot of people, including a listener whose email we're going to talk about in a second, would disagree with that. I disagree with it for slightly different reasons. We got news this morning that inflation expectations, according to a survey which for years people paid close attention to, but now that it's giving ambiguous signals, people are inclined to diss. That point aside, inflation expectations for the year ahead have ticked up to 4.5% preliminarily, according to the Michigan survey. There are problems with it, as there are problems with other surveys, but the direction there is clear. We also got news that first-time claims for unemployment are hovering again in the very low 200,000s, which is a level consistent with reasonably strong job market performance, strong enough to keep the unemployment level the same. So by traditional measures, the economy's still running very hot. And I don't mean by that everybody's doing great and should be happy. I just mean by measures traditionally associated with upward pressure on prices. There's not a lot of slack in the economy. So I wonder a little bit about this ongoing euphoria, and maybe it's nothing more than that, just a carryover of the euphoria of the past few weeks. Stocks continuing to levitate up, bond prices continuing to levitate up, and thus yields down. I wonder if anybody's actually looking at the data.
Well, let's talk a little bit about that Michigan consumer survey. So this comes out every month. It's usually towards the end of the month, and there are a number of different pieces that are in here. They ask about, your sentiment on the economy. They ask about your expectations for inflations. Beyond just the sentiment on the economy, they ask about, hey, what do you think current conditions are on the economy? What do you think expectations are for the future in the economy? They ask all these different things. They ask you about what do you think gas prices are going to be a year from now. And I think that when we look at the data in the U-Michigan survey, here's why people are having trouble with it, just as an example. If you look at the responses for this month and kind of what we're getting out of it, and I'm going to quote here, at this time, consumers appear worried that softening inflation could reverse in the months and years ahead. So that gets at what you're talking about with inflation expectations rebounding. Likewise, despite easing prices at the pump, one-year gas price expectations rose to the highest reading since June of 2022, and five-year gas price expectations are at their highest since March 2022. So this is where I think we see a little bit of a disconnect here in that normally future expectations of gas prices are very tied to current gas prices, which have come down almost 15% in the last month and a half. And now you've got consumers saying, no, we think gas prices are going to rise faster than they ever have.
This isn't how you use the Michigan data, though. You plug it into your model and you ask what it suggests for future inflation, because in the past it's given better, and this is a little bit technical, it's given better model fits, i.e., models that better line up with history and generate better predictions if you're into this type of thing. And I'm putting my analyst/applied economist hat on here now and saying it's good in models. It's a good forecaster. Whether or not that element of the survey is consistent with answers in other elements of the survey, that particular element is better in a model than some other measures of inflation expectations. And this is not my observation. People have been using it when fitting models for inflation for a long time. And again, there are others, and things may have changed, and it may no longer be the best measure of expected inflation. But whatever your measure of expected inflation, I wouldn't special plead and say, well, let's discount this because other elements of the survey contradict it. The important thing is that people believe inflation is going to stay above the Fed's target of 2%. And that's enough to get them to ask for wage increases, or if you're a business, price increases that are higher than 2%. That's my only point. I'm not predicting a surge in inflation. You need another spike in some special factor like oil or a supply chain crunch to cause that to happen. But the data don't scream to me disinflationary economy either. So I worry about this, what to me, and reasonable people can certainly disagree, but they'd have to be reasoning outside of our economic experience and venturing beyond what models suggest. And you can say, well, models suck. They're these things that eggheads use to predict variables, and real world is more complicated. True, but you'd be surprising at how well they can fit and predict relative to seat of your pants. And I wonder if people are actually looking at the data when they make their triumphalist pronouncements about inflation.
Right, and I guess and this is where I've been kind of for the last month and a half to almost, month and a half or so, is I think it's safe to say that over the next 3 to 6 months, absent an oil price shock or something like that you mentioned, Mark, I don't think that a return of inflation in the next 3 to 6 months is the biggest problem on our bingo card.
What do you mean by a return of inflation?
I don't think that you are going to see inflation if inflation in April is higher than it was in October, I would be very surprised.
Yeah, I'm with you on that. That sounds about right.
That's what.
Yeah, okay.
I don't think you're going to see it increase from here over the next 6 months.
But it feels unlikely given underlying economic conditions, and I know we want to get to Dan's email.
We got time. We got time.
Continued disinflation without economic pain, and that's a really important caveat because the celebratory crowd is declaring victory in that we didn't experience a sacrifice, what researchers call a sacrifice ratio. There was no cost in GDP. There was no cost in unemployment to getting inflation way down because a lot of us, especially people who reason like I do, missed the special factor of supply shocks and how they can work both against you, supply chain induced shocks, I should say, how they can work against you and for you. Totally missed the magnitude of those. I did, and others who use similar models did. And I was listening to them too, and there was confirmation bias there. I wanted them to be right because there's comfort in saying, the textbooks I learned from, they're right. Look at this model; it's playing out perfectly, and this is what it suggests for the future. We all have to be on guard against that. But at the same time, it's hard to dismiss the idea that economic tightness matters for inflation and price pressures. It almost certainly does, and unemployment remains, what I would argue, using very conventional logic, is unnaturally low, as evidenced by the report this morning, the first-time claims report, and expectations remain way above the Fed's target. Even if the Michigan survey is off by a full percentage point, it should still dictate a bias toward a tightening stance if you're a policymaker.
And the place where I do land is, I think what we do need to be worried about in the next 6 months is very much that this slowdown turns into the recession that the people cheering what we're seeing right now are saying, no, that's not going to happen.
Yes.
That's where I land, which is, hey, I think that over the next 6 months, there's probably no major concern about an inflationary rebound because there's a chance you end up with a recession instead.
Yep.
If that recession does not show up in the next 6 months, then I think you really got to be concerned about a rebound in inflation later next year because I don't think you've extinguished that fire.
We're saying the exact same thing, but from slightly different angles. So thank you for clarifying.
Let's take a quick break here. When we come back, I think we have trivia, and then I want to get to Tucker kindly forwarded on a listener email from yesterday, and it ties right into what we're talking about right now. So I think this is perfect. We're going to have an email from one of our listeners and trivia when we come back.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Vonner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. Securing your family's financial future is one of the most important elements of estate planning. Leaving assets to your children can be very beneficial. However, gifting these assets can pose major problems. If you gift your home to your kids and they suddenly decide to sell it, your gift could create massive capital gains tax problems. Cushing & Dolan are experts in elder law. Let them help with your legacy planning by calling 866-848-5699. Ask for their new guide called Making the Most of Gifting Assets. Whether you're deep into the planning process or just starting out, this guide contains the information you'll need to make the right decisions for your overall plan. Call today, 866-848-5699, and get this new guide, Making the Most of Gifting Assets. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi folks, it's Susan and Mike from the Armstrong Advisory Group to talk with you today about our top year-end planning tips, which are featured in our brand new guide for the month of November. There's a lot of information in this guide, Mike, that we can certainly use throughout the course of the year, but some of the tips that we've included, if you don't implement them before year-end, it's too late. What are those?
Yeah, so a lot of them have to do with retirement accounts. So, for instance, if you have a required minimum distribution, that's a 12/31 due date, and most of the custodians actually require you to do it earlier than that, so get on it if you have an RMD. If you're considering a Roth conversion, that also needs to be done by December 31st. You can't do it until your tax filing deadline. And 401k contributions, once again, must be in to your employer-sponsored plan before year-end. You have a little bit more flexibility if you have an IRA, but with some of those things, it's by year-end, not the tax filing deadline. There's also a big one to keep track of this time of year that a lot of people look into, and that has to do with harvesting potential losses. And given the way that markets have fluctuated this year, it very well could be that you have some capital losses in an investment portfolio, and at least looking at those and seeing how they could benefit you from a tax perspective is important. Obviously, caveat, speak with a tax professional or advisor when looking at this type of thing.
Great. Thanks, Mike. Folks, you can request your free copy of this brand new guide by calling 800-393-4001. That's 800-393-4001. You can also request your free copy of our top year-end planning tips guide by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
Trivia brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited, dine in only. On this date in 1995, Toy Story, the first feature-length film created completely using computer-generated imagery, was released in theaters. Toy Story would bring in over $240 million at the global box office and would begin a long run of hits for Pixar. Woody the Cowboy was voiced by Tom Hanks, but do you remember who voiced Buzz Lightyear? Trivia question today. Pretty easy. Easy all week. We like it here on the shortened holiday week. Which actor provided the voice of Buzz Lightyear? Once again, which actor provided the voice of Buzz Lightyear? Be the 10th person today to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that gift card in the next segment because of the shortened holiday week. It's usually on a Friday. But 617-362-1385, and the 10th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Mark, so Tucker was kind enough to forward on this email from a listener, Dan, yesterday, who emailed us this in response to something that was said on yesterday's show. I was not a participant, so if this was directed at you...
We were talking about economic data.
Okay.
And we made the point that by an economist's or a researcher's standards, the economic data are, in historical terms, good. And I've said before, but sort of meekly, that we shouldn't attach value judgments to data when we present it, but it's hard not to. It's hard not to say the labor market is strong because on average nationally, it is relative to its past performance. It's hard not to say economic growth has been strong relative to the economy's potential as we can measure that potential anyway. The problem when you make statements like that, which I do, Everybody does, because you can't help it. You want to put stuff in context. Is the number good, bad, indifferent? Well, relative to history, it's good.
Let's read his email.
Shall I?
Here it is. I'll quote a couple parts of it. Tucker, I've listened to the show religiously for years. Today, one of the hosts was asking why people don't see the economy as good as it is, and I almost blew a gasket. For those of us who are not stockbrokers and investment consultants and the like, I offer the following, because this is what I see. A dozen extra large eggs cost $5.69. A cryo pack of 2 sirloin steaks, 10 ounce each, costs $9 the day Donald Trump left office. Today, the same pack is $22, and I'm no longer buying them. Box of cereal is nearly $7. My 401k is still down 30+% from the high point in January 21. Bag of Doritos, it's over $5. The list goes on. I used to spend $85 to $100 a week on groceries on average. Now it's $145, and I'm buying less. These are some of the things us rank and file see every day, and I won't even get into the damage from political policies. What was this man thinking?
Yeah, Mark.
I'll cut things off there.
I was trying to go ahead.
I won't put words in your mouth, but I think this gets at a couple things, and we've talked about some of them. And the first is the difference between rates and levels. And we often talk about inflation in terms of the rate of change. And it's true that the rate of change has improved. Prices are no longer going up as quickly as they used to be. That doesn't mean that the price level has come down. In fact, price levels in the aggregate have gone up, and the reason why is that the biggest component of price changes is labor cost. And labor costs have not come down, nor are they really going to come down across the board. And the reason why is simple. Mark, if you were working at place X making $20 a year, and I came to you and I said, Mark, it's been a really great year. I really appreciate all the work that you've done. We're seeing some deflationary pressures right now, so I want to take you from $20 an hour to 19.
Yeah, this
doesn't work for you.
This is one of the reasons why economists aren't bothered by inflation. It's very hard to cut nominal wages. Workers don't care. I don't care myself about real wages. I just want to know that I'm making more last year than this year. I might not. You and I might have a different price index in mind.
We have, as humans, we have egos, which means that if someone comes and says, I'm going to pay you less, even if there's a good reason for that, we say, no, like, you're not paying me. No, this is what I'm worth. Like, no, like, and I'm not saying this is bad. I'm just saying it is.
This is why people hate inflation, right?
A piece of wood, on the other hand, if there's too much supply and the lumberjack says, you know what? I was selling that for $5 a square foot last year. Now I'm going to sell it for, $4.50. Well, the wood doesn't get all up in his face and say, how dare you? It's just, okay, you cut too many of me down, and that's what it is. Labor doesn't move that way, and so that's why when we talk about the improvement in inflation, it's been in the rate of inflation, not in the level. The level is still high.
The other point I want to make is to Dan, who took the time to write a really well-composed and thoughtful email, is, Dan, you're right. Economists should not describe the economy as good. Too many of them, and we all wear the hat here sometimes.
Sure, I do it. I mean,
too many of them. Go ahead, Jerry. Sorry.
Yeah. No, I interrupted you.
Too many of them let their political biases color their commentary. So it's dangerous to call the economy good because the figures we take are estimates of averages. There are always people who are doing better and worse. I once heard a very prominent financial planner who was on the radio nationally in the 2000s and 2010s. I heard this about 2010, 2011. Talking about how good the economy was because it had grown at something like 3% annualized quarter over quarter. This was 2010, 2011. House prices were on their way to bottoming at negative, 30%.
Unemployment was still 8%.
Unemployment was like double digits at this time. Yeah, but things were going in the right direction. And this radio show host said, I can't believe people think things bad. What's surprising to me is how good things are. And this was I almost reached through the radio and strangled this guy at the time because
No, we can't encourage violence.
Only someone who misunderstands what these numbers represent and were invented to capture could use them to label the economy as good or bad and therefore try to shove this notion down people's throats that the economy is good, therefore you should shut up and be satisfied. Things are a lot more expensive than they were 3 years ago. 20% more on average, much more in some categories, a little less than others. One thing I'll disagree with Dan on a little bit here is that he seems to put all the blame on one political party. And Dan, I got to tell you something. If you think monetary policy is to blame, the Fed chairman is a Republican. I'm sorry to say, as someone who's always voted that way. Those stimulus packages that pushed demand way up while supply was constrained, they were supported by a Republican president. So the one thing I'll disagree with our friend Dan on is who is to blame for this politically. There's plenty of blame to apportion as to who's responsible for inflation here.
Let's take a quick break. When
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutsky, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today, we're talking about the implications of gifting assets away. Todd, if you're trying to protect your assets from the cost of long-term care expenses, what are the risks in giving your assets to a child rather than transferring them to an irrevocable trust?
Yeah, that's a great question. So many people feel like, oh my gosh, it's an irrevocable trust. I've lost all control. I've given up the ability to do just about anything. You know, you hear that all the time. But you know what? Think about it. If I instead gave my investment portfolio to my children, right, or my rental property to my children, I mean, how much control do I have over that? I got none. I mean, I got to rely on them to pretty much do everything, not to mention the fact that, let's say I gave my rental property away. Technically, I can't sell it. I can't do anything without the children doing it. And what you forget is the children then would be entitled to all the rent. Well, you gave away your rental income. What about if a child gets a divorce and you gave them an investment portfolio to hold on to? Well, that money would all be subject to their divorce or any of their creditors. Plus, it all gets picked up on their income tax return. Folks, you give away assets, you lose all control and create lots of adverse income tax and gift tax consequences. You're way better off setting up an irrevocable trust to protect your assets from the cost of long-term care.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699, or you can request a copy from LegalExchangeShow.com. Once again, 866-848-5699, or you can request it from their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. For your chance to win our daily trivia contest, text us at 617-362-1385. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
Trivia question today was, which actor played the voice of Buzz Lightyear in Toy Story, which was released on this date in 1995? Well, that would be Tim Allen, if I could talk. The year before providing his voice to the iconic Buzz Lightyear, Tim Allen was at his peak. Allen simultaneously had the highest-grossing movie, topped the New York Times bestseller list, and also had the highest-rated TV show. We have two winners to announce today. Winner of the Financial Exchange Show t-shirt was Robert from Ellington, Connecticut. And the weekly winner, taking home the $100 Applebee's gift card, was Bruce from Whitensville, Mass. So congrats to both winners there. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood, void where prohibited, dine in only.
Tim Allen's a really interesting career in movies and TV.
Oh, yeah, of course. I love Tim Allen.
Well, I think what's so interesting to me about it is he basically showed up out of nowhere, had just a monster 1990s, and then was like, okay, I'm basically out, now do like some sporadic stuff after that.
Yeah, like Galaxy Quest is so underrated.
Oh, it's a fantastic. I mean,
yeah.
But it was, most actors and actresses who build careers, they have like, the 8 to 10 years where they're kind of getting it built up, and then maybe they have, their 10, 15 years in the sun, and then they've got, 20 years where they just, kind of live off, their peak. That's kind of the standard platform. Allen's first thing that he ever did was in 1988, and basically he never did anything else. Like it was really 1990 is where he, kind of said, okay, I'm gonna, really, push it here, and he pretty much like cranked out stuff for the 1990s, and then after that was like, I'll do a couple animated things here and there, and then I'm other than that I'm kind of done. And I guess maybe look, he started as a stand-up in the 70s, so I guess this kind of devalues that part of his career if we talk about it that way, but even a lot of the stand-up guys who get big, I mean, Adam Sandler took years to, kind of go from point A to point B in his career, and Allen just showed up in the early 1990s and was like, yep, Home Improvement 1991, I'm like the biggest star, and that was it. It's just, it's remarkable. He pretty much just showed up, was a dominant force in entertainment, and then said, you know what? After Cars in 2006, where again that was really the last thing he had done that was meaningful.
Cars.
I said Cars 2.
He wasn't in Cars 2.
I'm sorry, Cars. Yeah, no, he was in Cars.
No, he wasn't.
Yes, he was. There was a Buzz Lightyear car.
Oh, that doesn't count.
There was a Buzz Lightyear
car. That was in the
car.
ending credits. That doesn't count.
There was a Buzz Lightyear car.
He was barely in Cars.
I'm sorry, but this is a thing.
That's a cameo thing.
All right, well, then the Santa Claus movies. He did one of those every 5 years.
Didn't he do a
then.
sitcom for like the past 10 years on Fox, too?
Yeah.
Not much watched. Last Man Standing.
Last Man Standing, yeah.
With
didn't even know that was a thing.
Most people didn't.
Very popular show.
I had to look up the name to make sure.
Yep.
Oh, there you go. I'm wrong already. Okay. Let's talk about something else then. We just covered a bunch of inflation stuff. Let's see. What do we want to talk about here, Mark? Any good story? What are you feeling, Mark?
I feel like I want to apologize to Dan and anybody else that we may have rubbed the wrong way yesterday and just reiterate that I agree. When people report economic data, they should cool it, myself included. A texter texted in after our last exchange and said, "Oh my God, is Mark annoying?" And I got to say, texter, I agree with you. I couldn't live with myself.
No, the problem is you, like the listeners get a couple hours of you a day. You got 24 hours
in my head.
A day.
Believe me. Well, this is why I talk to the dog a lot.
The other piece on inflation.
But Chuck, can I just say if I ever slip into that, if we ever slip into that, and I'm sorry, I don't mean to make value judgments about how the economy is for any one individual. On average, the numbers are impressive, but GDP was invented in the 1930s because we needed to figure out what the heck was going on with the economy. Was industrial activity actually picking up? Was agriculture as depressed as journalists made it seem? It wasn't for a few years that politicians started touting GDP as a scoreboard measure of their success. It wasn't really meant to be used that way, and it's morphed into something that a lot of people find grating for very good reason, like Dan, our emailer from yesterday, with respect to inflation.
A lot of the other statistics we have came from the 1940s with the World War II effort. It was, okay, how do we get resources? How do we marshal them to build up the war effort?
Yeah,
absolutely. And we haven't really modernized most of them since the 1940s. We're still using a lot of the same things that we did back then. So, I mean, you think about the advances we've seen everywhere else, and it's, well, we're going to send out a survey to 20,000 businesses once a month, and they'll get back to us, and we'll run it through an algorithm, and that's how we'll figure out the unemployment rate.
Yeah, it's just, I can understand people coming back at data when we report it and saying, don't tell me how to feel about the economy. Don't tell me how to feel about the state of our polity, our republic, whatever you want to call it. It can't be captured in one number. GDP does not capture that, nor do inflation and unemployment. And they weren't meant to. They've been bastardized and abused by politicians on the left and on the right, I guess. But it started with FDR touting those numbers, and now it's just a tradition. We can't get away from it. But they're very, very misleading averages relative to people's experience.
No, the two things that I'll say on it, I think that there's much more value out of the directionality of data in like when you put it all together, where if you see like 8 or 9 different data points moving in one direction, I think then you can say, yeah, there's probably something happening here. As an example, we talk about wages a lot, and fortunately we have like 5 or 6 different wage trackers that are out there, whether it's private sector ones like Indeed, public ones like the Atlanta Fed, the Employment Conditions Index. There's a bunch of them. When they all start saying the same thing, then you say, okay, there's probably something going on here I need to take note. But again, it's kind of, hey, is there a lot moving in one direction, not just, hey, wage growth this month was X. Like, well, no, that's not what it actually was. These are all estimates.
And the other, go ahead, sorry, Chuck.
I think that's part of it. The other thing that I'll say on this, when we talk about inflation or anything else, what any data point is at one point in time is not representative of the actual lived experience. And what I mean by that is, if you just parachuted someone in here today and said, hey, inflation's running at 3.5%, they'd say, little hot, but like not bad, right? But having lived through 2 years where inflation was running anywhere from 5 to 9%, you can't take away that experience. It's something that you went through day in, day out for that time period. People love to gloss over things and kind of... The example I always like to give, and this is a dramatic one, but it makes the point very well. People look back at the Civil War back in the 1800s. And they're like, well, things were tough, but we got through it. And I always make the point, no, we didn't all get through it. Hundreds of thousands of people died. Like, you can't just say, oh, like, everything was fine in the end. Like, that's not how it works. Things can still be really hard. And granted, like, dying in a fight with your neighbor is worse than inflation. But the point that I'm trying to make is just because you're here now when you've gotten through the hard stuff doesn't mean that just didn't happen and everything's fine. Like, you still went through a really challenging period in the economy. And that matters, too, not just where things are today.
If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December, according to U.S. News & World Report. December is the start of dry season on the island, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com, learn about all 3 islands, and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Mark, I want to talk a little bit about the latest union that may be gearing up for a strike. We've got the American Airlines flight attendants who are asking the National Mediation Board earlier this week to declare negotiations with American Airlines at an impasse and give the union permission to strike. This is the process they need to follow, simply because with airlines, because of their critical importance to the overall economy, they basically have to go to federal mediators and ask them for permission to strike. They can't simply walk off the job, as you see in other industries. But flight attendants potentially gearing up for a holiday strike or shortly afterwards. And again, ultimately, as we've seen with a lot of these negotiations this year, most of them don't result in strikes, and the ones that do have been resolved relatively quickly outside of the writers and actors. But this one is just the latest that is kind of coming to a head
And
here.
they've all resulted in concessions on wages in the mid-single digits, right? The AA flight attendants union. I guess this is this isn't just AA. They're represented by the national union, the Association of Professional
It is, but
Flight
it's
Attendants.
specific. It's kind of like the
They're gonna
UAW,
strike
how
AA
they negotiate
and see
with
how
all
it
of them.
goes. Yeah, see if they can get a good precedent. They've all resulted in the flight attendants are asking for mid-single-digit increases. They want 6, the flight attendants do. Presumably they'll get something a little less than that. I assume that's a negotiating tactic.
Well, they're also asking for an immediate raise of 35,
Yeah.
which is where
well, this is a
the
good place to start if you're a negotiator, right?
Well, to be fair, the pilots for American just won a more than 40% bump in pay over a 4-year deal. So you average that out, it's more than 10% annual bumps there.
Yeah, and I don't want to overreact to that and this and others, but are these levels of increases, and you are up on several measures of wage inflation, and
Yeah.
you correctly point out that they've come in, yet these high-profile cases are resulting again in settlements in the mid-single digits, much higher than year-over-year inflation and more consistent with inflation expectations in the mid-single digits, which is what we're seeing from some surveys, though they might have flaws.
Let's take a quick break here. When we return, Stack Roulette.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Securing your family's financial future is one of the most important elements of estate planning. Leaving assets to your children can be very beneficial. However, gifting these assets can pose major problems. If you gift your home to your kids and they suddenly decide to sell it, your gift could create massive capital gains tax problems. Cushing & Dolan are experts in elder law. Let them help with your legacy planning by calling 866-848-5699. Ask for their new guide called Making the Most of Gifting Assets. Whether you're deep into the planning process or just starting out, this guide contains the information you'll need to make the right decisions for your overall plan. Call today, 866-848-5699, and get this new guide, Making the Most of Gifting Assets. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit DAV5K.Boston.
Hi, this is Susan Powers from the Armstrong Advisory Group. There are some important financial considerations to keep in mind as the end of the year approaches, so here are some crucial tips for you to think about. Our guide this month is called The Top Year-End Planning Tips, and in it, we'll walk you through key concepts like tax loss harvesting, family gifting, and properly calculating your required minimum distributions. All are important to your overall planning. Call our office today at 800-393-4001 and get your copy of this free guide that may help you finish 2023 with less concern about your financial strategy while setting you up for a positive start in 2024. Call 800-393-4001 and ask for your free guide today, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and we want to thank everybody who came out for this year's DAV 5K. The event was an incredible success and a terrific tribute to our great American heroes. Now, if you weren't able to attend but would still like to make a donation, you can visit dav5k.boston for all the information. That's dav5k.boston. The DAV 5K Boston was presented by Veterans Development Corporation.
Mark, what do you have for me for Stack Roulette?
Guys, the Wall Street Journal has ranked dog breeds based on which are easiest or hardest, depending on how you want to sort this list, on your wallet. So what they do is look at various characteristics, trainability, family life, social skills, maintenance. So there's this behavioral evaluation system they have in this very lengthy table. It's got almost 100 breeds on it. And then they look at life expectancy and then estimated lifetime cost. The upshot is they rank dogs from most to least estimated lifetime cost. A little bit of, as a longtime dog owner, I wince at something like this because you don't think about that once the dog becomes part of the family. Like, they cost what they cost. It's a,
right. You don't buy a dog because you're like, this is the cheapest one.
I'm not buying a Corolla here. I'm buying a dog. Okay. Cheapest though, if you're considering dog ownership, and finances are a factor, because as we just talked about we were self-flagellating for the past 25 minutes about how insensitive, at least I can be, to how averages don't capture people's individual experiences, as you put it so well, Chuck, before we went to the break. Cheapest breed is the Rat Terrier. They live the longest. They're easy to groom. They have very few congenital I hate to use the word, but they are defects. As you know, inbreeding causes
Yep.
defects in the heart and other organs in dogs. So rat terrier, the Papillon, I guess that's how it's pronounced, long life expectancy, low cost, good trainability, and other factors. Look, you could go to this list yourself in the Wall Street Journal's personal finance section. I think you get a couple free articles a month, even if you're not a subscriber. This will be a little offensive to you if you love a particular dog or breed and you're committed to them. But if you're thinking about shopping around for a pet, this might not be a bad way to gauge cost and other favorable characteristics along really helpful dimensions. I think this is a great piece in the Wall Street Journal.
Yeah, I mean, look, I don't think this is offensive. I don't think it's the way you necessarily make the entire decision on a dog, but you got to factor the cost in, because the worst thing that can happen if you bring home a dog is, gee, it's too expensive and now I got to put it up for adoption. I mean, that's worse in my opinion than anything. Even though Mark, the most offensive piece, I don't remember if you were around for this one. It was the beginning of last year, where Bloomberg's answer to high inflation was to let your dog die.
That was written by my friend Teresa Ghilarducci, who's a professor at New School. I'm not name dropping. I happened to meet her she was a client for a while. Teresa wrote that piece. I've ribbed her, and she laughs.
The other thing, Mark, when we're looking at this, if we really want to get into it, it's not just estimated lifetime cost that matters. The rat terrier comes in at an estimated lifetime cost of $28,573, lives for 15 years, so it's less than $2,000 a year. On the other hand, okay, the English Mastiff lives for just 8 years at $31,000. You're talking almost $4,000 a year.
Yeah, most of those come toward the end, as any dog owner or cat owner. You got cats, right? So any whatever the case.
I have a cat.
You have excuse me. You're not a cat. You're not a cat.
There's
hoarder.
a difference between someone who has a cat and who has cats.
But most of those costs tend to come in the last few years, or maybe even the last 6 months of life. But yeah, there's very high correlation between. If you want to smooth out the cost, get a dog with a high life expectancy. That'll mean lower average cost. Yeah.
So I want to talk a little bit about what the Utah Jazz are doing as far as their TV deal this year. So they pretty much said, look, we used to have our games on one of these regional sports networks like NESN or NBC Sports Boston. And what you ended up with is just a situation where it wasn't tenable anymore. The stations, a number of them have gone out of business nationally and so on and so forth. And so the Utah Jazz says, okay, here's what we're going to do. We are going to air all of our games on a public broadcast station in the Utah region. And we're also going to have a streaming service that we build ourselves. So if you really want access to all the games within 150 miles around, where we're based, great, you can have access to it through that. And I think this is actually where sports should be going, because I'm a big believer, if you really want to grow your sport, let people watch it. Like MLS, I would love to be able to watch it more easily, but like the weekly game is on Apple TV Plus through a separate subscription you need and this and that.
It's nuts.
And I would be a much bigger MLS fan if you just said, hey, put it wherever and let me see it. And you will get more people who are interested. You will get higher ticket prices then because people are interested. And I think giving broader access is the single best thing that you can do if you really want to encourage long-term economic growth for your sport and not just, hey, how much am I going to get from this weekend's gate? I think that is absolutely what you should be doing, is get it out there. And I think the NBA has been very proactive in that they've let their highlights basically proliferate on the internet with no problem, whereas the NFL's like, nope, we're taking this down because of, copyright violations. The NBA, I think, has been on the cutting edge of a lot of this, and I like what the Utah Jazz are doing here as well. Let's take a quick break for, the Thanksgiving holiday. I hope everyone has just a great Thanksgiving with friends and family. I hope you have somewhere warm with a lot of food that you can get to. We'll see you on the back end of Thanksgiving. Have a great holiday. We'll see you soon.
Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late